Back again for the third time. We have a special guest with us, Bryant Delgado. He is here. He is a lender, actually our preferred lender. Go ahead and let yourself introduce yourself and then tell everybody where they
this
can
is
find you.
my name is Bryant with Blueprint Home Loans.
And where can they find you?
They can find me at Bryant G Delgado or texaslending.bdt.
Awesome. So today we're talking about, since we're all in the business here in the industry, I want to talk about really just topics that are going to be touching regarding real estate or not. And the first one that I want to jump into really is, why are most realtors losing their deals at approval? So a few things that we're seeing is whenever it comes to the pre-approvals, sometimes I'm seeing realtors submit, especially like on my side, submitted pre-approval with like way higher approval on it. So I feel like people are not guiding them. Have you seen anything like that before, Bryant? Do you help people, realtors guide, like whenever they're about to make an offer, do you help guide them?
Yeah, we help guide our clients. I do see that, it depends on the real estate office. Some people want pre-qual letters based on stated information just to get the emotional side of the sale going. But then once the paperwork is submitted, it's completely opposite. And, once everything is validated, when the verification of employment comes back or the earnings are not as high as they disclose, and, it kills the deal. And so I think that in order to prevent that, it's best to do a full upfront work that does take longer, which, when you get a client, we're in sales at the end of the day, the client's hot, you want to get them motivated to buy. But at the end of the day, financing are set, guidelines and DTI and income is set figures. I mean, we can't change that once it's validated. So
I also believe that it goes both ways. A lot of agents and a lot of people in general try to pre-qualify people by standards. Something that I was taught by Bryant here is that, every file is different. Even if you have same income, same job title, you're a different person, different social. The system does automated approvals. So even though if someone maybe has not gotten an automated approval, that doesn't mean that you won't, right? Like the system will determine who has that automated approval. Am I correct on that, right?
that's correct. Yeah, no file's ever the same. Even if they have the same income, same job, same DTI, credit, no file is ever the same. The risk assessments with these underwriting approvals, automated underwriting approvals that the system fires can be completely different from mine and yours, even though they might be similar.
Yeah. And what do you think agents should be asking their lenders during that pre-approval stage to make sure, that they're okay? For these new agents out there that maybe don't have a preferred, like Brian at Blueprint, what are some questions that agents should be asking their lenders?
I think agents should be asking like, hey, did you do a soft pull or a hard pull? There's a big difference between soft pulls and hard pulls. Did you verify all their documents? Did you get the verification of employment back? Is it been through upfront underwriting? All these questions, the more answers you get and positive responses you get, if you get yes to everything, it's going to be a cleaner file.
Yeah.
And a cleaner process for the client.
Due to social media, I think we're starting to see a lot of misinformation out there, something that we battle on a regular basis. What do you think are some mortgage myths that you see a lot of realtors talking about, or maybe some things that they're saying, but they don't really understand it? I think recently we had something come up about the ITIN loans whenever it comes to FHA, and people were saying that nobody was going to be able to buy with an ITIN loan. Do you want to clarify that? And then also other myths that are in the industry that you're seeing people go out there and just kind of like spread around.
So, ITIN loans, there are a lot of lenders out there that will lend. There are special banks, like, for example, First Financial Bank has an awesome 5% down program. Now, you have to go directly to them. There are other lenders that we can broker to that require 25 to 20% down. So they're all alternative programs for ITIN buyers. One of the myths that I guess kind of is my pet peeve is like these whole like investor DSCR like BRRRR process. They make it seem like it's very easy, but it's not. Because if it was easy, everybody would do it.
Yeah,
I learned that early.
I learned that early in my career. The BRRs are not as easy as you make it seem, for sure. But right now, you just said something interesting that I want to talk a little bit more about. The reason why I've always worked with Blueprint Preferred Lenders and Brian in particular is, am I hearing that if there is a better loan product out there for a client that you know, you will refer them out that way, like you would to First Texas?
Yeah, absolutely. That's why I gave a shout out to First Financial Bank. You can contact Rigor Esparza. You should have him on the podcast. Very good outlet for I-10. Low down payment option.
Nice.
You know, they at one point they had 0% down. It is a portfolio product directly with their bank. I wish I had access to it. I tried, but I can't, so I just refer everything out to them.
Yeah. So something interesting that Flora asked in the Spanish podcast, right? She actually put me on the spot. She said, what do you look for whenever you're looking for a preferred lender, right? Because Blueprint is a preferred lender for Lionsgate Realty, and I was like, honestly, what I'm looking for is somebody who has been and I'm not looking for an actual mortgage company. I'm looking for the person that is running the branch, right, or running the office, or my contact. I said I'm looking for somebody who was here before the pandemic, before the the boom, right? During the pandemic, a lot of loan officers got made a lot of money with interest rates. They weren't selling, and that's one thing is that we talked about this too in your interview, was that mortgage lenders are not in the financial industry. They're salespeople. They're selling products. They're selling loans, right? And so during the pandemic, they made a lot of money, but they weren't selling. The interest rates were selling. The payments were selling. So now that we're out of that, and it's back to selling mortgages, selling rates, selling monthly payments, it's definitely challenging. So I'm looking for somebody that was in the business before this, right? Because also, I don't want to do business with any branch manager or any a broker or anybody who owns a mortgage company that started during the pandemic, because what I have seen before too was that whenever we had our mortgage meltdown and we had our recession, you see people that build a certain lifestyle for themselves whenever the boom is in, and whenever the boom stops, they start cutting corners. Customer service starts going down. They start getting unethical, and sometimes even breaking the law, to keep their lifestyle going, and so that's why I look for people that were here pre-pandemic and that know that this industry goes up and down, and so when the industry's up, they're not out there making mistakes like buying huge houses and multiple luxury cars, et cetera, et cetera. They're staying level-headed. I mean, you can treat yourself, but hey, you got to remember that this is not a it's not a game. It's not the goose who laid the golden egg, right? It's just the market.
I'm gonna just jump in here and be an advocate for post-pandemic babies out here. It's you don't there was still a lot to learn in the pandemic, and there's a lot to learn now. Mm-hmm. I think as long as you're willing to learn, you're willing to grow, and you're willing to pivot and see the market for what it is, not let your own thoughts stop you. I think there's still a lot of hope, a lot of potential, and we've gained some great agents during this pandemic. They came from other fields that have already changed the industry that I do respect a lot. So they're both sides of that coin, but I think it takes somebody to know the difference for sure.
Yeah. But also, there's a lot of real estate agents that came into the business during the pandemic, and they're having a tough time adjusting to the new lending world, or to the new mortgage lender.
It goes hand in hand,
Yeah.
because even on the lending side, a lot of loan officers, a lot of people entered and got their loan officer license, and there was 300,000 loan officers, and most of them have already quit and exited the business. And
where is that, like nationally? There was 300,000
nationally, and I think now it's about 100,000, and they're even projecting another 65,000 to quit by the end of the year.
Wow,
That's awesome.
We've lost here in the Houston market, because where I focus in is the Houston market has lost close to 24,000 agents since the pandemic highs. We are actually lower than pre-pandemic numbers now. So I think that that's a great opportunity for a lot of people willing to get into real estate,
Same.
and a lot of people that are willing to change and learn.
I think so too.
Same.
Yeah.
It goes hand in hand on the lending side.
So Brian will lead you to believe, right? You know that, and we were talking about this in the Spanish podcast, that when it comes to loan officers and realtors, it's what came first, right? The egg or the chicken, right? And me, like I said, I started in the lending world as a loan officer, and then I got into real estate, and I got my MLO again 2 years ago. I would tell you that the mortgage business or mortgage companies would not exist without realtors, and Brian disagrees with me, right?
I do. I think this nation was built on debt and the housing market. Like after the Great Depression, HUD established FHA, and if you were saying I can sell to a cash buyer, okay, you'll sell just only to cash buyer. Now you're limited yourself to whatever that percentage equates to out of 100 people, how many people have cash. But now because of FHA, now you have financing, now you have debt, now you have your loan officers and mortgage companies offering financing. It opens up to 90 qualified buyers.
Yeah.
You know what I mean? So
I will just say that if lending wasn't here, our job would not be obsolete. There would still be cash buyers.
Exactly. But listen, I used to think like you. I used to think like you until I started doing business in McAllen, Texas. And I realized that even a small town that's adjacent to Mexico, they have cash. I mean, I try to get people mortgages and they don't want it. They'll just rather go borrow money from somebody or get cash. So like Vic just said, without loan officers, we'd still be here.
that I guess you make a point there because you still have the cash buyer.
He said, "You got 1 point."
One point there.
One of the things when Giovanni, we're talking about these topics and mortgage myths, and I was doing a little bit of research on what are some mortgage myths. One of the conversations that stuck out to me is the moment that you start speaking about rates, you lose your authority. Mm-hmm. Right? Smart buyers don't want, excuses; they want strategy. And I think even in the low rates, we strategized how we're going to take advantage of those low rates and keep more of your money in your pocket versus, going over appraisal and making a bad financial decision, going in over, competitively just to save, points on the interest rate. And then even today that these agents can't sell because the rates are high, it just goes to show that no one ever really strategized with the client and painted the picture for them, which is something that we do differently here at Lionsgate Realty, is that we paint a picture for the homeowner. We want to have your growth plan and your growth strategy from A to Z, where you're looking to be at now, where you're looking to be at in a couple of years, 5-10-year plan. And I do think that one of the mortgage myths for that are the rates. I don't think the rates have anything to do with our business. Do they sway? Do they play a factor? Sure. It'd be dumb for me to say they don't sway an opinion one way or the other, but in the reality is that people love the end product. Like they love the result. They don't like the product. Mm-hmm. No one likes to pay a mortgage. They like to have a good place for their family to enjoy pools and horses and whatever you're buying. They like the result of the mortgage, not the product. So I think, would you guys agree or disagree that a mortgage myth is the rates?
I actually agree with you, Vic, because even to this day, I sell the dream. I sell the home for the families. I sell that. When it comes to rate, I try to sell the payment. I try to make it comfortable. What do you feel comfortable paying monthly versus talking about rate? It's a hot topic now. Rates are very volatile. I stay away from the rate conversation.
Yeah. And to bring that conversation back to us, what do we say about the market crash? Everyone that says we're waiting for the market crash. I mean, I had somebody tell me that today, but even they laughed at it. He made fun of himself. Mm-hmm. This is his 4th year in a row reaching out to me about a home, and he said, "I will wait for the crash." And I said, "Okay."
You know what's funny is that before the I think about 2 years before the pandemic, right? People were talking about a crash, and there was even there was books of people predicting the crash, and the guy that predicted, the mortgage meltdown is predicting a crash now, and this and that, and it's like, everybody was like, I'm waiting for the crash, I'm waiting for the crash, and then it never happened, and then when the pandemic came, everybody thought that was a crash, and I mean, it exploded. I mean, real estate exploded and went everywhere, and even now it's like, where's the crash? Where's the crash? And I've already told people, like I told them, look, the mortgage meltdown, we may never see again in our lifetime. I don't think. I mean, just the way it went down has really changed so many things in the mortgage business that I don't think we will see something like that again in our lifetime. It could be, we don't know, but I don't think so. And, this whole pandemic thing, right? I don't know. I mean, will we have another pandemic? Who knows? But if we do, I'm going to invest in a pool company, and I'm going to invest. I mean, we're going to know how to maneuver through it, Really what I'm thinking is, what's next? What's next? What's going to happen next? War on our soil, what do you call it? Everybody's predicting this whole hack, from China, right? For all our grid, for the grid to go down and stuff like that, whatever happens doesn't matter, because what it showed us here, right, was that, and I didn't know, is that real estate agents and loan officers are essential workers because we had to work. So if the grid goes down, I mean, I'm sure there's going to have to be some real estate that has to be moved,
Yeah, definitely, Brian. I have a question for you. So every warrior needs a sword, right? And I believe that realtors, their sword is definitely their lender. And a few mistakes that I see a lot is these realtors, whenever they don't have like a preferred lender. What should a realtor be looking for in their preferred lender, even if their brokerage doesn't necessarily have one?
I think, like I said, the partnership between a realtor and a lender is key. It's what ultimately going to be the end result for the client is to get the home. And without the real estate agent finding that home and without the lender getting the loan, we can't make that dream happen. So agents need to, like, they need to interview their lenders, like, get to know them. Like, do you even like your lender? Sometimes you have agents working with loan officers and they hate each other. I think you have to like each other, get to know each other, get to know their experience, what they've been through. Like Nate said, there are a lot of lenders that started recently and they haven't been through all the cycles. And I think it's important that even if they're new, right, at least they're being mentored by someone who's been through all the cycles. So,
yeah, I do think that's it's super important to have a preferred lender, and I think it's there should be a list. As a matter of fact, we should probably come up with a list and attach it to our notes here on the podcast of like questions that you should ask the lender that you're interviewing. Vic, do you have any off the top of your head that you think a realtor should ask the lender that they're interviewing?
Absolutely. I'm going to give you guys some free game from our new home sales side and from when we built our business. You're only as good as your team, and you have to be efficient. And as the team is growing and you have a pipeline full of deals, you have to have somebody that will share time with you and it will strategize for these clients, because not every approval is easy and not every approval is cookie cutter and super easy. So, Brian at Blueprint takes the time to sit down and strategize with each individual client. And even when something falls apart, we set them up on an execution plan that's on a different follow-up system. And collectively as a team, we all work for that dream of home ownership. So get with somebody that aligns and sees the vision that you see, that's willing to give you that time. Because I'll be honest, Brian is stuck through with us when we had another lender, and he was willing to share that time with us. And ultimately just the dedication, the consistency, and the willingness to learn has, forged this relationship. And now we know what to look for. So that is my clear advice, is make sure that they share the same vision. They're willing to work for that client as hard as you are working for them, and that they're willing to help you organize. Everyone needs somebody to lean on. Everybody needs somebody to back up. And if you guys back each other up, who else than your lender that get deals, done? So that's what I think you should look for.
And I'll put you on game too. If you have a lender and that's your preferred lender, you're giving this guy or this a girl all your business and leaning on them, and you ask them for a referral and they say something like, oh, I can't give you any referrals because then all my other real estate agents are going to get upset, then that's not the lender for you. That lender should reciprocate. He should be fair with everybody that's giving him business. He should, and anybody doing business with him should not get mad if they give another real estate agent, a referral. Another thing too is if you're working with a buyer and you give them to your lender, and they get them approved, and then they call your lender and say, hey, I want my approval and I got a new agent, right? That agent should call you and let you know, hey, look, I got them approved, and if they're gonna use me to be the lender, I'm gonna get them a loan, but they are calling me with another agent, and so it's a courtesy, it's respect, it's and I see too many people, that these lenders, they just they want to be friends with everybody because they think that's gonna bring them business, and they stand for nothing,
Dang. Some hard feelings.
Tell us how you really feel. Brian, I know you have a heart out, so just let us know whenever you need to bounce, okay? We don't want to keep you captured.
I actually completely agree with Nick because I see that happen a lot. And I personally do call the agent and be like, hey, what happened? Let me get feedback from the client. And whether it's good or bad, I'm going to give it to you. Mm-hmm. And I give them feedback as to why a client went with another agent, and then you said something, about lenders reciprocating the referrals. And so, how I do that, how I achieve that is, if I give a good service to the client, sometimes I wire the client and they call me and they refer me their cousin, family member, or whatever. Mm-hmm. Well, guess what I'm doing? I'm calling, hey, Giovanni, remember Diego? Mm-hmm. Well, he's sending me his brother and he's pre-approved. Here's your pre-approval letter. Yeah. And then next thing you know, you have a pre-approved client, because I do think that the majority of the clients do go to the realtor because, mm-hmm. like Vic said, I'm not here to buy a mortgage. I'm not here, they're here to buy a house, so they're gonna go to the realtor first. Yeah. But as a lender, if you have systems and processes and a sales process in place that you wow the client, they're gonna refer you their friends, family, circle of influence, whatever. And sometimes they come to me first, and I go back and I say, okay, you came from this client, you work with this realtor, I reciprocate it and I send it back to the same realtor.
Yeah, that's awesome. Before we go on to the next topic, I did want to touch on that. The way that I've seen Brian reciprocate, some business and things like that. And not only just Brian, right? So I don't want you guys to blow up the phone lines and Brian up. But the way I've seen, our partners, our referral partners work is that they're all willing to share in some of the expenses when we're doing some of these bigger marketing pushes, mm-hmm. because it's beneficial to everyone as a team, right? All of our vendors and all of our partners are always willing to play with us, pay to play, because, we all know that we're all going to get benefits from it, right? If we do a home buying seminar or we do a networking event or we do something and they're willing to, share in that expense, then we know that that's the partner I'm giving the lead to, and vice versa. I think it is important to, make sure that we've had instances where maybe there's a great lender, but they're unwilling to share the expenses, but they want all of our business. Yeah. We've had it with title companies. We've had it with appraisers. Not appraisers, with insurance people. We've had it with all sorts of survey companies. They want the business, but they're not willing to, do anything to earn it. And it's not just it's no longer just doing a good job. It's also relationships. You have to build the relationships and invest into yourself.
Yeah.
No. Okay. I think that was a great conversation today, guys. Go ahead and exit out. Brian, I'm gonna let you exit out first. Let them know where they can find you and remind them what you do.
Yeah. Appreciate you guys for having me on the podcast. I enjoy coming here. You can find me at Bryant Delgado and TexasLending.bdt.
Mm-hmm. Nice. Yeah. My name is Victorino Cortez. I am the president of Lionsgate Realty. You can find me on Instagram at Real Presidente.
So real quick before I go out, both Vic and Brian are both recruiting. So where can they find you guys for recruitment? And what are you looking for right now?
I'm looking for people that work really hard at getting in contact with me because that's what it seems like are the most successful people.
I mean, I'm looking for loan officers that are looking to grow and scale and double their production. We have operational support, something called Blue Advantage that has, gain hours back in my day, help loan officers get more prospecting time for sure. And so I'm looking to add loan officers, more branches, nationwide, not just in Texas, but nationwide. So hit me up, text me 832-275-4694 or DM me.
Let's go.
All right. So my name is Nathan Malderas. I'm the master broker here for Lionsgate Realty. You can find me on all my social media outlets at Better Called Nate.
And you can find me on Instagram as that Giovanni Frank. Until next time.